this is a rough Monday morning to come into. We were all hoping for a little bit of short covering. How tenuous is this, in your perspective?
Yeah, we didn't need these Japanese headwinds on top of what happened last week after the unemployment numbers. So this is one of those things where when you live through it, you got to put it into perspective, and that's what we're trying to do. We're in the midst of a correction, 10% down in the NASDAQ 100, going to be a little lower today. You get your shopping list out. You want to look at where the opportunities are because this is August. August, September, historically, 2 worst months. We've been down the last 3, August and September's last 3 years. So this is kind of normal. These are seasonal headwinds accelerated with some big headlines, some geopolitical concerns. You mentioned before this, tensions in Israel, and then an election season. So the headlines are going to really make us focus on this sell-off. But as someone looking at the fundamentals and the patterns, this is a buying opportunity and one that when you go through it, you don't want to, you don't enjoy this. But when you put it into perspective, I think we're going to be okay.
Can I challenge you a little bit? Because I just don't feel that this is a kind of normal August at all. I have rarely lived through 43 basis points drop. I mean, my worst margin call in bonds was in 1994. I haven't seen twos drop by 60-odd basis points in this space of time. What's the bond market telling me that the equity market is barely catching up?
Well, the bond market is moving at a ridiculously rapid pace. So it's telling us, one, that the Fed messed up last week. They should have cut. That was the biggest problem. And then you get that unemployment data. Now, it was a little skewed. No one talks about Hurricane Beryl adding to that unemployment on the temporary side. But yes, we're still coming off historically low unemployment, 3.4% to 4.3%. You tell me 10 years ago we're 4.3% unemployment. All right, life is good. Inflation is dropping down to 2%. So step back. Let's look at it. Yes. Somme rule. Is that where you're about to go?
I was just about to say, where are you? Because the Somme rule has been a fairly prescient indicator of tougher times to come. I suppose the question is this. Yeah. If it's not GFs, so let's just lay out the framework. So 6.5% drop in the NASDAQ this morning. Bonds down by 60 basis points in the space of a week, the short end of the curve. So the context is this. This is not GFC. This is not a pandemic. This is potentially... Now the markets are saying to me something more than a soft landing. That's what these markets are telling me. So what does that do to risk in your view?
Well, I mean, I think you want to look for opportunities. So I think this is still a risk-on environment. I think this is a long-term secular bull market. And given these headlines, given what's going on, go back to perspective. That is the most important thing. Yes, the Somme rule was triggered, but that was created in 2019. Even Claudia Somme, the author, said that this time could be different. It is statistically proven to be the best indicator, but so were 2 negative quarters of GDP. We had that. Nothing happened. We had the yield curve has been inverted for the longest time. So I think this time may be different. Wake up to this morning, you don't feel it. When you look at the fundamentals, I worry about the story out in NVIDIA today.
I mean, down 20% from its peak. That's now technically in a bear market. You've gone through correction. It went like that.
Well, we had a 20% correction March, April in NVIDIA, and then we had a correction last August 24th. They had the best earnings
So
ever.
This is an air pocket. You're with Julian Emmanuel. You're going for lunch, and the two of you are rubbing hands and you're going to an air pocket. It's an air pocket.
It is, and look at this 95 level technically in NVIDIA, and you have what you consider an opportunity. People have been waiting for this. Oh, when can I get in? When can I get in? When it happens, that's when you get scared. So this is, through experience, you learn that over the long term, these are great opportunities. Will it be the low today? No. But this is an opportunity where you get your checklist out and you put in some low ball bids and maybe you get lucky and maybe you end up looking at your positions. You know who's happy today?
Go on.
Warren Buffett. He's very happy today. They have the most cash on the sidelines. You think he's just going to sit there and watch this and do nothing? No. He's getting ready to go shopping. And that Apple position, he had 50% of his stake in Berkshire was Apple. He had to cut it back. I didn't think it would be this dramatic, but it's something to watch.
It's interesting because, we have had Nancy Tengler in the seat, and she said, not owning NVIDIA is a bit like having a root canal without Novocaine. And here we are. You look at some of these drops, and you say to yourself, look, the world isn't stopping. We're not going to not buy iPhones. Yeah. Companies are not going to AI-itize. They're not going to not spend. And so, therefore, that's when the flow of money comes in. But then let's just take it to the small caps. Danny's not here. Homage to Danny. She'll be on surveillance in a while. And you can be pretty sure she's going to be talking about small caps there. But you've had this great run-up in Russell through July. It was the best outperformance by small caps to big caps since 2001. I've got to reprice that now.
You do.
I know we've already begun to reprice it, but do I more dramatically reprice that?
Well, the Russell has been the most dramatic mover. When it rallies, it rallied 27% from October to December last year. It had a rally of almost 20%. It almost eclipsed the NASDAQ 100. Last Wednesday, we were talking about it being the leader of the indices. So the Russell is super sensitive to these moves. It was a rotational move. We saw people get rid of their winners. They went into the losers. They looked for opportunity. They went to the Russell. Well, that rotation trade is now over, and the tide is taking out all the boats right now. Is that the
understatement of 2024?
Yeah, well, it lasted for a great 3 weeks. It was fantastic. But, yes, Danny is not going to be very happy this morning. I still think there will be a nice opportunity year-end for Russell. Once we start getting into this cutting mode, we are in a cutting cycle. That is known.
So what does it take to get the Fed? If we don't have as it were, a cut in between, what does it take to do 50 in September?
Well, I think 50 is on the table for September. And Jay Powell, I'd be shocked if they did do an intermediate cut. The last time they did that was COVID. I don't feel like this is a COVID emergency right now. It stinks, but no. So I think watch Jackson Hole, watch some of the Fed speakers over the next 2 weeks going into that. Jackson Hole 2 years ago, if you remember 2022, he threw cold water on a rally when he said he was raising rates. He can do the exact opposite this year and say, all right, we know we need to cut. We didn't expect unemployment to accelerate as much as it did, and they're going to take the necessary measures, watching each data point one at a time. They'll go back to his boring little narratives. He's never going to panic, and I don't think we're going to get a cut until September 18th, unfortunately. But when he does it, I think 50 basis points is on the table, and he will orchestrate that and tell us step by step how he's going to do it because he doesn't break from script.
Do you think market participants are more inclined, to take risk rather than hide? In other words, deploy rather than run? Because I'm seeing haven in FX, in yen, in Swiss, and in rates. So I just wonder, can you wrap it up in a day and sort of say, look, today, Manus, this is the low point. It's a realization.
No. This will take time. This will take several weeks, and I think Jay Powell
of high volatility. Several weeks of high vol.
Hey, high volatility. The traders at the exchanges, they're very happy today because they're going to get some extreme volatility. That is a good thing for someone looking at the portfolio. Just put it away. Watch something else.
Don't look at the valuation.
No, don't. But like I said, just be smart. Look, nothing fundamentally has changed. That NVIDIA story about the chip delay, okay, that has me worried. But when you look at earnings, we're still getting earnings growth. We're still expected to get further earnings growth, especially in the small caps. So that's why I think the fourth quarter, we'll see them come back. But nothing has fundamentally changed from today to yesterday. Powell just missed an opportunity to cut last week, and the market is telling him you screwed up.